Hello, my friends. Let's go through a midweek update regarding global markets. After Nvidia's discount, gold hit a record while stocks in the market fell. We'll touch on that shortly. It seems gold has a bit more room to go. In a bit, we will also technically analyze the charts for both Bitcoin, gold, SPX, and Nasdaq. Let me briefly summarize the news. I took notes. Then we'll move on to the technical aspects. So we'll touch on it. Following the Trump administration's introduction of new restrictions on exporting NVIDIA chips to China, the two-day rise in global stocks came to a halt due to unresolved trade tensions in the United States. As Chinese tech companies dragged down Asian stocks, stock index futures in the United States and Europe, along with NVIDIA, fell in after-hours trading. Treasury bills remained almost unchanged after a two-day increase. And gold reached a new peak with the demand for safe haven assets. It will continue to rise further. The dollar's lost some of its Tuesday gains as the Swiss franc and euro outperformed most currencies. Japanese long-term bonds rose. After a brief recovery following last week's volatility, stocks began to decline. Investors are grappling with a slew of tariff news, including Trump's announcement of an investigation into the necessity of imposing tariffs on critical minerals. These fluctuations rocked global markets this month as investors struggled to establish long-term positions due to the unpredictability of Washington's policy statements. In Japan, as volatility in the treasury bond market decreased, 30-year bonds recovered, and the Bank of Japan's statement suggested a policy response to higher U.S. tariffs. A stagnant economy may jeopardize the Bank of Japan's plans to gradually raise interest rates. Meanwhile, the EU and the USA tried to resolve trade tensions this week, and White House officials stated that most of the US tariffs imposed on the Union will not be lifted. Italian Prime Minister Meloni is also expected to come to Washington to meet with Trump. Oil prices remained stable following a slight decline on Tuesday. Now, my friends, let's start with Bitcoin. Actually, yesterday, I posted a video on crypto education. I sent it to you too. Here. With this drop, I mean, a lot of panic was made, but being too panicked, I honestly don't think it's necessary because I think the upward trend here could continue for a while longer. Of course, when would this thought change? If the 82,200 level breaks downward, I think the 69 or 72,000s could be reached. Now here, of course, we could say 85. It's about 84,800 due to this resistance. After this is broken, it might try the red trend. It might test the range of 92,000 to 95,000. But it's important to note that as long as this area isn't passed, the risk line of 72 and 69 below continues. But if a long position is to be opened here, it should not be held for too long in this area. After this place is broken, see, breaking means, of course, in order to counter the possibility of pullback like this, we need to see 4-hour or daily closes above 84,800. And then we can be a bit more comfortable about going long. And we can extend our TP levels here up to 92, 95. However, if we open a long inside, these should be very short term. It should be. We should set our TP with figures like 0.60 or 1.5%. Besides, as long as it stays below this, the short position will be more active. If we were to make a general assessment, if you opened a long position here and are stuck in a reverse position, and if your account is suitable and your liquidation level is far below, there is no need to worry. Because I generally think that these areas are now a reversal zone. I mean, at least I don't expect much below 69,000 for now. I consider this entire area as the turning point necessary for the big rally to start. So it's not like opening a long position here and saying, let it fall if it falls. If possible, the lower we can open, the better. If we are stuck here and our wallet allows, we need to determine the points to add carefully. In general, I'd prefer being stuck in short rather than long in this area. I'm afraid Because if I get stuck in a short position here and when it reaches 69, if it turns and I still don't close my position, the possibility of going upwards is very high because it could go up to 300,000. But when I open the long, even if I am stuck here at worst up to 69, it turns from here and goes upward. I don't think there's much room left to go downward. That's why short positions scare me. I'm talking about long-term positions, but long does not scare. Let me mention that too. Now, as I said, for short-term traders, 84,800 is above, while 82,200 is below, forming an important support level, my friends. Let's move on to the gold side. On the gold side, it seems like there will be a bit more increase. As you can see on the daily chart, gold, which is extremely affected by these economic developments and wars, is at the level of $3,400 and perhaps even great. Possibly, I think it will continue its rise up to 3,980. Although there might be small corrections here and there, the likelihood of progressing at least up to 3,980 and then making a deep correction is slightly higher, just for your information. B. Yeah, I think the rise on the SPX side may continue a bit more because as I mentioned in all my videos, SPX is generally a chart that respects its gaps a lot. And there is a small gap here. Let's show it like this. Let's move to the 4-hour. Look, I've already marked the 4-hour chart. It is about to close the gap in this area. It will head towards this region. So what is the condition for this, friends? It needs to stay above this area, but can it attempt? Yes, it might reach 5,288 here. There might even be momentary dips below. Could occur, but as a result, initially, the rise in SPX could go up to the level of 5,600. We could see. Afterwards, of course, will the decline continue here? It's necessary to look at the reaction in this area, but especially if it passes above the level of 5,648 here, we can say that the decline in SPX has at least temporarily ended. Let's move on to the Nasdaq side. It's closed. Let's open our chart again. Now on the Nasdaq side, there might be a decline for a while longer, but as long as the level 17,317 is not broken down, it will remain just a correction of this sharp rise. And here initially on Nasdaq, that is, even if this decline happens or not, I think the level of 20,550 or maybe just slightly below might be tested. Where do we derive this conclusion from? SPX and Nasdaq mostly move in a coordinated manner. Bitcoin also moves in coordination with them. The reason for the correction here could be this sharp rise, because in a single candle here, significant received the reaction. Yeah, honestly, don't think it has completed its correction. So it's not that it will definitely fall to 17,317. I consider the drop to this region normal. I'm stating this in that sense. It can also turn around in between. I mean, it can try at 17,980 levels. It can try from this area, but here we can say that our target is 20,494, my friends. So in this context, even though there may be short-term declines in SPX, Nasdaq, and Bitcoin, we can say that somewhat longer rises might come. However, generally, will Bitcoin, Nasdaq, and SPX continue this rise? We will get the answer between 91 and 95 in Bitcoin. We will get in at 3,980 in gold. In SPX at $5,646 at the point level. In Nasdaq at the 20,500 level. We will get the answer to whether to continue or not. Just so you know, that's all from me for now. Take care of yourself. See you later.